This I just found something very serious, and it is a discovery that will give us an insight to how fast this whole thing can resolve. So let's just watch on, shall we? In my latest discovery, I found an ugly truth, and that's because yesterday there was a congressional hearing, and some insights were being leaked out. And I came to realization that there was no way to have a quick resolution to this trade war. No way. So because of this, this certainly sets certain timeline to when what we should do for our investments and prepare ourselves economically. So make sure you watch until the end, because in the end I'll give you something very good, strong advice based on what I've seen. So today I'll cover the latest news on the trade war internationally and the initial stock market reactions. I'll further elaborate on what is the ugly truth that I've discovered. And I also want to highlight yesterday we have an incredible interview with Sam Ree, and the interview was pretty long, so 1 hour plus. So some of you all may not be able to capture the full points, and I want to summarize some of the very important points that Sam Ree, Chief Investment Officer of Endowers, gave us, and some key takeaway. So things are evolved on the real-time basis. So remember, hit subscribe, and I do suspect that that within these few days, many counter retaliatory measures will happen. So I'll try to keep everybody informed real time. So remember, this is not to advise you to buy or sell. This is only for education, entertainment, not financial advice. And the S&P 500 yesterday has LS, right? Okay, so it's went down by another 1.6%. Initially, it started on well, and everybody on social media was just posting that everything is okay right now. Mr. Liu, stupid idiot. You missed the boat again. Everything is going to be fine from now. Luckily, I bought yesterday. I'm making a lot of money. Blah 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 blah. Guess what? It went down after that, right? So I see a lot of people really punting, right? And I'm trying to urge every one of you all, to have really an investment strategy that can stand the test of time. Not this buy, sell, buy, sell, buy, sell. Same thing happened in Nasdaq as well. Started well and end up bad. Even the bonds went down, right? Bonds is pretty interesting. It went down $88, and that's because according to Sam Ree as well, that the whole market right now is a panic mode. So when you have a crash in equities of this magnitude and a lot of fear, people normally sell down the bonds as well, so as to raise cash. So I think that's a very important insight. We'll talk more about fixed income in a short while. So at this juncture, the S&P 500 and the Nasdaq futures has went from quite a negative to suddenly break even or slight positive. So it basically again, right, describe a very volatile and uncertain nature. I wouldn't read too much into this kind of movement. So Donald Trump today is 9th of April, where his tariffs come to pass, right? His 10% tariffs has now flooded the market, and he signs an executive order slapping China with a 104% tariff. And this one really, is really hitting everybody where it hurts. The global economy has been rocked with a sweeping 10% US tariff take effect. So and these new effects rates on import to US on dozen economy rose further, with tariffs imposed on Chinese product reaching a staggering 104%. New tariffs of rates 20% on EU, 26% on India, 49% on Cambodia. And by the way, when you have 104%, more increases have no meaning anymore. You can go to 200, 300, 1,000, it has no more meaning anymore, because by this time, Chinese will have done whatever they need to take to avoid this 104%. For sure, your iPhone and all this is going to cost a lot, this into US especially. So the new wave of tariff have an immediate effect on some Asian market, with Taiwan falling 5.8%, Japan Nikkei diving 5%, and so on. So it's just just bad. Incidentally, Tom Lee came out and make a statement, and he says that he apologizes and say he got the tariff announcement wrong, although he's still pretty bullish and see a probability of de-escalation. So basically he says, I want to apologize in terms of tariff day because he said that there could be a V-shaped recovery. I told everybody fat hope, right? So, so his V-shaped recovery did not happen. So he said he misread the signs coming from White House, coming ahead of the announcement. To be fair, he's hardly alone. The market reaction is a cumulative 14% decline, blah, 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 was complacent going to tariff. The resulting market theory is not due to a reaction to a trade war, but rather in our view, the fact that White House have broke a covenant of capitalism, which is a stable and predictable regulatory environment. This is precisely what I say right now. It's got nothing to do with charts, nothing to do with graphs, nothing to do with P, nothing to do with valuation. It is just tariff war right now. Well, he did say that he thinks that the stocks are too far stretched to the downside. Recession risks are excessively priced. So it's still pretty bullish about it. Okay, at this juncture, I'm not having this optimism. So this is where the ugly truth that I discovered. So there was a congressional hearing where Cortez Masto, I think she's a senator of one of the state, and think of it like a member of parliament, right? She represents her state, and she grills Trump trade representative of what she was trying to shield, and so on. This is where the key thing is. Never mind about this tourism thing because she talked about tourism, but this is the most important thing, okay? So Senator Catherine Masto actually grilled U.S. Trade Representative on what Donald Trump's sweeping tariff plans are, challenging the idea that the administration will be able to hit a Wednesday midnight deadline while negotiating with 50 countries without a better plan to handle negative effects on U.S. tourism. This is where it's important. Everybody take note, okay? He basically says to ask this top U.S. official under Trump called Greer. Okay, Greer, how long did you take to negotiate the U.S.-Mexico-Canada agreement during Donald Trump's first administration? That means in 2017 or 2018, the U.S.-Mexico-Canada agreement was being negotiated by this guy, or at least he was involved. So how long did it take to negotiate that agreement? He said, oh, we did it at breakneck speed. Limpe did it really fast. So Hao Lian, right? We did it in 2 years. So this senator said, 2 years. And you're telling right now, got 50 countries coming to you and you enter a negotiation and you can do that overnight. This is sudden awareness to me. There's no way to negotiate all these things quickly. Have you ever got yourself involved in a contract negotiation before? I've done it many times. I think the fastest contract negotiation, for fresh negotiation, I think I've done maybe 2-3 months. That's already a very small deal. Don't talk about those ready template. Now you have to draft a new agreement. You got to flip over the other side, okay? And then the lawyer there will take a look at it, suggest some new terms, and then you have to agree. And then you yourself have discussed, then you flip it over to my side. My lawyers have to look at it. I have to look at it. I agree, don't agree. And we fight it out and flip over, that kind of thing. This process takes forever, man. So this process will take forever. So to think that a quick resolution to this thing, the fastest you can ever have is Trump come and say, okay, ceasefire right now. But I don't think that happened. But the best you could say, oh, we got a special deal from this guy, that kind of thing, where things need to work out. All the nitty-gritty details won't be worked. There's no way this thing can resolve quickly. No way. So yesterday we had a wonderful sharing session with Sam Ree from Endowers. He was the chairman and CIO of Endowers, and he shared with us a lot of very interesting insight. And some of them are very critical in times like this. So if you haven't watched it, please go watch it. Even you watch it, I'm sure you missed it, because I watched it actually 2 times because it is so informative for me. And I thought it's important for me to share with you some of the interesting insight as we deep dive into it. Very important is yesterday we missed the promotion code because some technical issue. I've already shared the promotion code in the description in that video and also in my Telegram channel. So this is a promotion code, I think $100 off for 6 months, for up to $100 off 6 months for new customers of Endowers. So, go claim it. But let's watch what he says, shall we? So I've extracted a few key salient points that are very critical. A lot of you have missed it. These are very investment critical knowledge. Let me share with you all these because a lot of them are applicable to our current crisis. So first of all, he thinks that it is impossible to predict the current situation right now because the setting is completely new. Yes, we do have trade wars before in 2018 and also in 1930s, but not in a similar setting because in the current setting is we came out of the pandemic. There was an inflation. There were Federal Reserve increasing interest rate rapidly and things like that. So and now we have a unpredictable precedent in US. So the setting is somewhat similar, but a lot of them are different. So he thinks that there is no reference that we can look to exactly to try to mimic to current situation. So I asked him point blank, what is his base case? He says that outright there's no base case. So outright, it is just volatility and uncertainty, and that's important, right? So it at least tells us there is no way to predict. So either Trump disappears, maybe at the end of his term or during the midterm elections, the entire Republican Party get voted out of the Senate and the Congress. All the uncertainties are already priced into the stock market. So this is his first advice, very important. The second advice, I would like to share this with a lot of people in the 1965 community because I see it happening so fast. The minute the market goes down, okay, everybody, Mr. Lu can buy, not, right? And the market goes up. Mr. Lu, you see, you stupid idiot, I yesterday bought, now go up. And then the next day go down again, right? So right now, I would like to urge everybody, I share Sam Ree's advice. When the price move, curb the urge to act. There is no need to act, right? When the price goes down, I think you have quite some time to decide whether you want to buy. Okay. When the price goes up, I'm not too sure you will go up in a sustained way. In fact, so far, what I've said before, they all haven't been successfully in staying up. So I think that's very important for us to take note. And by the way, I do think that there is a lot of value in inviting good speakers like Sam Ree. The next person I really reach out to is Chris Tan from Providence. We all love Chris Tan, man of incredible wisdom. And keep your subscription on for my YouTube channel. Hit subscribe to make sure that you're already subscribed so that you'll be able to tap his incredible wisdom in a time like this. So when he comes to a channel, at least you are aware. So the next thing I want to say is that he mentioned very clearly diversification within equities and also within other asset classes. And he mentioned fixed income. Fixed income is bonds or whether treasury or bonds and things like that. He also mentioned geographical diversification. That's more or less covered if you buy a globally diversified index. And he mentioned that fixed income is very attractive right now. And that kind of resonates with what Ben says as well. And I'm certainly very keen right now to take a look at fixed income. For example, if you take a look at some of these bond funds right now and treasuries, the price is so low that the downside risk is limited. Not say it won't, limited, but the returns from the payout from the dividends or the coupon payment is very high. So if it goes down, never mind. I collect 4%, 5% of returns, and if it goes up, good. I get the capital gain. Either way, I win, right? So it got me thinking, right? Okay. So hint, got me thinking. So he also gave a buying signal for himself. He said that for him, he thinks that it is difficult for the Federal Reserve to cut interest rate at this point in time. And actually, I agree because right now there's potentially inflationary situation. And for the tariffs to go up, it means that there's inflationary pressure. And certainly we don't want this we don't want this kind of inflationary environment as consumers. So the Fed most likely would like to keep the interest rate high to bring down those inflationary pressure. So for him, he thinks that a 20% fall or more, it's a good time for him to reassess the situation Okay, and he thinks that it's rare for markets to go beyond 20%. So 20% is a good yardstick for him. And I think there's a lot of wisdom in that statement. Okay, so next one. So we talk about gold. There's a lot of mention about gold in our community. A lot of people asking whether gold is a good buy. He said that gold is a good asset when there is inflation risk and where there's a need to flight to safety. And also one thing everybody didn't take note of is when the USD is strong, gold is strong because gold is denominated in USD. So when things are bad, like now, of course, gold tend to do generally well. And suddenly when it flips the other way around, when things become calm and good, then gold will do badly. So these are cyclical kind of asset. So you want to be careful, when you handle cyclical asset. I already talked about the fixed income. And on the note of Singapore banks, right? Singapore banks has fallen by so much. And a lot of people asking, so Singapore bank can buy or should I sell, right? So he said that, it's also a cyclical kind of thing, right? Today, banks are doing well for certain reason, and tomorrow banks may not be doing well. Okay, so he actually urged everybody to focus on growth, and we should not lose the sight of growth. Okay, and last thing is never put your eggs in one basket. Always learn diversification. There's a lot more wisdom. I can't summarize that 1 hour. Trust me, it's worth investing 1 hour to listen to his wisdom. Okay, so in a nutshell, I think there's a lot of good advice from Senri. Remember, we're going to try to invite more speakers to come, and each of them will bring some wisdom. In a few days' time, I'm going to interview a senior minister of state. He's going to bring some wisdom as well. And I think if you look back at the whole macroeconomic picture, this is not going to have a quick resolution. Okay, so I don't think for me there's a rush to fire. I'm not telling you to fire, not to fire. For me, I don't think there's a rush to fire, but there is a need to monitor the case very closely because certain situations change by the day. Like right now, it's 9th of April. It's all Armageddon right now. But things could quickly flip because that's what Donald Trump said. A lot of people are dying to back him to cut certain deals. But deals cutting don't take so long. So anyway, thank you for watching. Okay, I'll keep you updated. I'll see you in a day or two. Bye-bye.